Welcome back, investors, to Ticker Time News. I'm Adam, and the cooler than expected consumer price index for November set the stock market up for another upbeat session, surprising the markets, but not you, as we happened to call the exact CPI numbers yesterday on the live stream. Now, the main indices all registered sizable gains shortly after the open. Specifically, the Dow Jones, or ticker DIA, was up 707 points, or 2.1%. The NASDAQ, the composite, or the QQQ, was up 428 points, or 3.8%. And the S&P 500, or SPY, which gapped up above resistance of its 200-day moving average at 40.34, and the downsloping bear market trend line, also above that. Pretty spectacular morning, all happening right at the open. It was a 2 sigma move, although it didn't last, but we were still in the green for the day. Now, CPI note, this morning, right around market open, I believe it was, about 10 hours ago or so is what it says on the timestamp here. We sent out to our private investor community a quick breakdown with the most important points about the CPI report. Now, total CPI was up 0.1% month over month. Expectation was 0.3%. And core CPI, which you take out food, you take out energy, was up 0.2%. The expectation was up 0.3%. Those monthly changes left total CPI up 7.1% year over year versus the 7.7% last month in October, and core CPI up 6% even year over year versus 6.3% in October. I still have the numbers written down here when we talked about it yesterday. 7.1 for CPI and 6% even for core CPI. I can't believe we called those numbers exactly to the 0.1%. That was pretty cool. Haven't done that before, so I'm kind of shocked by that. Maybe the Sam Bankman-Fried getting arrested, maybe the things are starting to get aligned in the right way now, huh? Maybe. Okay, now, I cannot believe that these numbers, again, we shared yesterday. But the important part, the key takeaway of the CPI report, we share it right here. It's in the bold on this note that went out. The key takeaway, and the big rally effort that happened this morning was fueled by an overall inflation cooling off. Inflation just came down nicely for the month. Now, it is a little high. It is still high. It's nowhere near the target level yet, but it did come down and cool off. And that the Fed should be at least a little convinced that tapering right now with the pace of its rate hikes and perhaps place a lower ceiling on its nominal rate. Now, that would be great. That would be great for the markets. That would be great overall. So tomorrow, it looks like we're getting a 50 basis point rate hike. I think with CPI coming down today, I think that really avoids any realm of possibility for a 75 basis point rate hike. But we'll talk about tomorrow in just a moment. Now, presumably, okay, some of the attention on a, let's call it sticky and elevated core services number in today's CPI report may have forced investors to rein in some of their enthusiasm in front of the FOMC's rate hike decision, updated summary of economic projections, and Fed Chair Powell's press conference. That all begins at 2 p.m. Eastern tomorrow, Wednesday. Now, let's go look at the chart here. One thing I want to point out before we go to the 5-minute chart is today's candle. If you notice, and let me get my highlighter here for this, the top or peak at 4,100 right here, this black line that's coming down here, okay? This black line is an anchored VWAP. It is attached to the high of 2022, okay? Which was, I believe, the closing of either the 3rd or 4th of January that we had our closing high. But that's what this anchored view up is attached to, or what it's anchored to. And that is basically using price, time, some other pieces of the equation to give you basically where the average investor's price point should be. If they bought at that moment in time, where are they? Are they underwater, above water? Where are they? Okay. And this is showing that if you bought at the top of the market way back in January, which seems like forever ago with the downtrend and bear market that we've been in this year, but we almost got back to a break-even point for some investors. Those who bought at the top in January almost felt break even if they only held on to that point. Now, we did pull back from that 4,100 level there, but that is pretty amazing that we came that close to that break even median number right there. Now, on the downside, we were held up right here, support, with yesterday's high, also the 20-day and 5-day moving averages, okay? All three acted as support. We can even go back in time to December the 6th, the opening. We can go back to the close of December the 5th right there. That line has been important for this chop box that we have been in for the past month or so, okay? I mean, we could even take it back to the closing date here on November 15th and the closing day here on November the 11th. All of those points match up with today's bottom when I'm talking about the bottom of the wick, like the absolute low of today, which was 39.93. All very, very similar and in line with each other. So that's been an important number for this chop box, again, that we've been in for the past month. Now, if we also look, the down-sloping trend line that has stopped every single major rally in the in 2022, it's coming down like this, all right? It obviously stopped the fall rally on December the 1st. And as we continue down, right, today, the candle body itself is only a hair's width above that line. But we close below it, and we close below the 200-day moving average. This is where I think some of that enthusiasm was kind of pulled back or held back, because some of the items in services did go up. So inflation in some of the services category did go up. Maybe that did scare some investors about how the Fed may react to that. But nevertheless, it is in a position where it could go either way, right? We saw the momentum at the open this morning and how far it ran up and above that downsloping trend line, again, which has stopped everything all year long. So it is encouraging to see that we did have that momentum when we get good news, okay? Now, besides that point, tomorrow could break either way. If it's good news, we could go and fall down, no problem. Or we could go higher. Now, one more thing to point out, then I'm going to go to the 5-minute chart because it's important to look there. The trend line that has supported the fall rally, right? It held as support in many different places along the way. I mean, we just broke down below it on December the 6th right here. That lined up perfectly with that down sloping trend line. Again, that has been the marker of this bear market and resistance. Those 2 points matched up perfectly where this candle opened at today. So again, some symmetry here with the way the chart lines up with trend lines, technical analysis. It's not voodoo or whatever, right? It works, and the market loves to use it. Now, let's dive in on the 5-minute chart here and point out a couple things. Give me a moment to get the chart set up, and I can explain a couple things here. Also, one more thing about the daily view. The volume profile for the daily view shows that the biggest volume spike for the daily view showed up right about middle of the channel for the chop box that we have been in now for a few months. Okay, I found that interesting. And if you look at today, right, look at the volume profile over here. There's a lot of gaps in it from when we had some big moves down. But the biggest candle, I mean, it sticks way out, and there's a red line attached to it right here. Okay, so on this candle, let me open up the statistics here to show you. At this candle, there were 213 million bids, okay? And there were 632 on the sell side. So 213 million on the buy side, 632 million on the sell side. That's why it was so hard to get above 40. What are we going to call this one? I think it's sitting right about at where we closed, maybe a little bit above it. 4020. 4020 had the biggest spike of volume at that exact price point, 4020. And again, 213 million on the buy side at 4020 and 632 million on the sell side at 420. That's why it was almost, I'm sorry, 4020, which should be right around 402 on the SPY if you're keeping track with that indicator. So that is important, okay? That is going to hold as a bit of a sticky point as we try to move around tomorrow before the Fed comes out and gives their all their data, right? Their press release, the rate hikes, the updated summary of the economic projections, Powell's press conference. Okay, now, one thing I want to point out here on the chart, we've got a couple of things, all right, that we need to pay attention to. Number one, this black line that starts, let me close this off, that starts at the opening candle this morning, and it's running down the screen like this, right? That is an anchor VWAP that's attached to the opening morning candle. All right, this is the 5-minute chart. Each candle represents 5 minutes. So it's attached right at 9:30 to that very first candle. Now, all day, except for a little bit at the very beginning, we traded under it and we were sloping down. That did not show much strength in the market, okay? Again, a lot of gaps on the volume shelf profile over here on the left-hand side, and that occurred when we were going down rapidly. Now, going back to something else to point out, the purple line, it runs through here, right through here where we were bouncing around all morning. That is the upper end of the weekly expected move, okay? So by the end of business on Friday, price action should be under that line, and it's at 40.52, okay? 40.52. I'm sorry, I'm reading that backwards. Dyslexia. 40.45. Please excuse me for that mess up. 40.45 is the upper end of the weekly expected move, meaning by the end of business on Friday, we should be under that line with price action. So it doesn't give us a lot of wiggle room up top. Now, that line does not represent support or resistance. That's just what the options market has priced as the upper range of where the options market believes price action will be. Now, the options market is right 68% of the time. Now, there is a much lower line, purple line. It's not on the screen here because we were up too high this morning and throughout the day, but it is down there somewhere. We just got to dig deeper. Hopefully the Fed tomorrow doesn't send us down to it, because that could happen. Okay, now we know what those two lines are. The other lines aren't that important except for one other. And actually, before I do that, I'm going to take these moving averages off for just a moment. Oh, no worries. I think I started a couple minutes earlier. Yeah, today was weak. It was. That's something I mentioned right at the beginning. Okay. Let's see here. Yep. Volume. Moving averages. I can leave volume. That's not that bad. Okay. Everything else I'll leave alone. Now, the other important line to pay attention to is the blue one that is going diagonally like this, okay? It goes all the way to the left and right of the screen. That is the supportive trend line that has been support all throughout the fall rally, okay? So we broke below it a few sessions ago, haven't been back above it except at the open this morning, right? Gapped right above that. So we gapped right up above the upper end of the weekly expected move. We gapped right up above the blue supportive trend line for the fall rally. All right. All right. So now we've got everything kind of marked here. Now let's go back to this morning. Things started to deteriorate early after the S&P 500 was met with resistance at 4,100. That level, 4,100, and that would be about 410 for the SPY. Now, at that level, there was also, it was also the same 4,100 level stopped the rally on December 1st. And remember, December 1st sent us all the way up to the downsloping bear market trend line, right? Now, the main indices, they steadily eroded from there. First thing this morning, relinquishing a large chunk of the opening gains by the time of the closing bell. Now, in the process, the S&P 500 fell back below its 200-day moving average. Now, the initial buying was broad-based, and it was aided, I think, by some short covering activity, yet many stocks pulled in from those early highs in what was a broad-based retreat. Now, I started looking for opportunities to short the S&P 500 once it fell below 4060 and was rejected when it retested that level. Now, that was where the downsloping bear market trend line was located today at 4060. And if we plot that on the map, 4060 is right here, okay? As a matter of fact, I should just clean up all of these. Oh, now I'm bringing that volume and stuff back. Okay, let's do that. Clean up the mess here. Now get rid of the trend lines, just so it's a little easier to see. Okay, so that level was right here, all right? 4060. Now, once we broke back below that, I knew that this right here, the upper end of the weekly expected move, a lot of times when price gets above it, price always wants to pull back to it, or at least most of the time. And then it has a tendency of hanging around that level, and it can actually hang around there for days. So I thought, okay, we popped up this morning, great momentum. Then we pulled back. We broke below the downsloping trend line. Well, that's a bummer there. We're losing that momentum. And then we get to the weekly upper end of the weekly expected move. And well, I thought, well, you know what? I guess we're just going to hang around here for the rest of the day. And, the day is over with. Well, I was wrong about that initial thought. So the second time that it tried and failed to break above that level, which is right here, okay? It first broke below right here, came up, retested, got rejected, came down, but then it slowly moved its way back up and got rejected for a second time. Now, when it failed to break through that level a second time, I took a short position and I wrote it into the close, okay? So my short position was right around when it broke below the upper end of the weekly expected move with this powerful move down right here. Now, it wasn't a big shorting major win day. It was a tiny little win, but it was a win nonetheless in what was a mediocre day. Yeah, there was big momentum and explosion at the open, but it just faded away. And at the very beginning, I mentioned a few reasons why. Mainly, services had some trouble with inflation not coming down, and we have the Fed tomorrow, right? Now, like I said yesterday, I am not holding anything open going into tomorrow. So what I opened today, I already closed. And I didn't use options, by the way. I used the SPXS, the inverse ETF or ETN for my trade today. So that's what I used. Now, like I said, I'm not going. I don't have anything open going into tomorrow. I'm going to wait and see because when the Fed comes out, there's always these big spikes up and down where the market doesn't know which way it wants to go. Everybody wants to be the first one, so they catch it at the bottom, but timing the market can suck sometimes. Imagine buying at the top of the market this morning thinking, oh, a huge gap up, all this momentum, we got to be going higher today. And then for it to just fade away. That's why I said yesterday I was not going into today. Yesterday into today with anything open. I was going to wait and see how the market digested the information. Okay. Well, the market sort of digest the information. They puked it out. That momentum disappeared. It was gone. It vanished. So the market faded for the rest of the day. But it did try to hold some support. Like you can see down here, right around the 4,000 level and right around 4,001. It tried to hold support there, which is a positive, okay? But it is still underneath the supporting trend line for the fall rally. And it is under the downsloping bear market trend line. And it's down under the upper end of the weekly expected move. So 3 important markers there. We are down under now. So I don't see that as positive, right? I mean, we were up 0.73% in the SPX. That's still a green day. Green is good, but it was much higher than that, and we lost some of it. Okay, let's keep going. Okay, so waiting for tomorrow to see how the market reacts to the FOMC's rate hike decision, the update or the updated summary of economic projections, and of course, Fed Chair Powell's press conference, where he's expected to comment more on the Fed's thought process and what they're going to do, and maybe talk a little bit about the economic projections, the summary of the economic projections. That's where we will find out how high and for how long the Fed could be going. Now, as far as an interest rate hike tomorrow, when we look at the CME Fed Watch tool, we are at an 83% probability of a 50 basis point rate hike. We are at a 17% probability of a 75 basis point rate hike. So everyone's looking at a 50. If it's below that, a 25, the market will rally. If it's above that, 70, the market will fall. If it's 50 basis points, the market just may move sideways. Because that part, I believe, is priced in. The 50 basis point rate hike, I believe, is priced in. However, what is not priced in is the summary of economic projections. How high and how far are the Feds going to go? That, my friends, is not priced in, okay? So as we go back to the daily chart here, and let me open this up here quite a bit, and I'll go to the Qs and the SPY in just a moment and look at those. The summary of the economic projections, I think, is the most important thing that could come out tomorrow. Remember when we were on the 5-minute chart and I said the biggest price point, volume price point on the volume shelf profile right here, it goes right down the middle of this chop box that we have been in now for over a month. For over a month, we've pretty much gone nowhere, okay? Something else that I've said about the Fed tomorrow is that the month of December, I expect clarity, okay? With the CPI report, we got some clarity today about what was going down and what was going up. Remember the note that I sent out to our private investor community this morning? There are some positives here, right? Now, the food index, it was up 0.5% month over month. That's not good. But energy was down 1.6% month over month. That's a positive. Shelter, that was up 0.6% month over month. I did get that one wrong. I thought shelter was going down. Used cars and trucks, they declined by a huge amount, 2.9% month over month. And they were down 3.3% year over year versus 7.5% in October. So that's coming down at a coming down at a rapid pace. Oh, my apologies. I looked at the wrong one here. Used car and truck index declined 2.9% month over month, and we're down 3.3% year over year. There we go. That's coming down good. Services inflation, though, that's where there were some problems. It held steady at 7.2% year over year. Now, the next line here, if you take out excluding medical care services, which was a big one, services inflation actually increased to 7.6% year over year versus 7.5% in October. That's not good. That's not good. Now, excluding rent, the last bullet point there, excluding rent of shelter, services inflation moderated to 7.3% year over year from 7.5% in October. So there's some good things in here. Overall, it's positive. However, there were a couple of negatives in the services side of the equation or the report. But anyways, the key takeaway, like I said at the beginning, was that overall inflation is cooling off and that the Fed should be convinced to taper the pace of its rate hikes and perhaps place a lower ceiling on its higher for longer motto that it's had for the past few months. Okay, I saw a couple comments popped up here. Let's see. Boop-a-dee-boo. Got that. Today was weak. Yep. I think the Santa Claus rally already happened. You could be right about that. Although it is typically a December thing, and December 1st is when we peaked, right? December 1st was the candle that tapped the downsloping bear market trend line. That was December 1st. And the Santa Claus rally is typically a December thing. However, if the Fed does the 50 basis point rate hike, and if the Fed then, in the summary of economic projections, says, well, we're still going higher for longer, that may freak the market out, especially if they mention anything about going above 5%. That would freak the market out, sending the market lower. Then possibly after all of this bad news has been removed and it's over with, it's out of the picture, it's a clear straight track to the end of the year, then potentially people get in better moods, there's less people in the office, easier for stocks to rise and float up. Maybe then we could get the Santa Claus rally, potentially. Again, getting all the bad news out right now, shaking it out, right? Get rid of those nerves, shake them out. Let's go. That is a potential pathway to the end of the year. I do think we would stay underneath that downsloping trend line. And you can see as we, let's go to the beginning of January, which is going to be, man, I can't believe how close we are to it. It's going to be right here is the first trading day of January. Actually, let me put a vertical line there on the chart. We can keep that mapped out. So if we sell off, okay, because maybe something in the summary of economic projections tomorrow by the Fed or something Powell says sends the market down over the next few days, right? Maybe we hit this support line right here, or maybe a support line right here. We don't go down as far. And then maybe we slowly creep up to the end of the year and boom, we meet that downsloping trend line on the last day of December, which is right around a very interesting number. Very interesting. I'm going to line this up perfectly. December the 30th, that downsloping trend line, it matches up to 40-20. 40-20. As a matter of fact, let me put that here so we don't forget. Let me clean this up right quick. Oops, I didn't mean to do that. I'm going to put 40-20. Okay, come on. I don't need you to pop up. Let's go right about, let's go underneath of it. And we'll write 40-20. I don't need it super huge. Okay, let's go like that. All right, so just a little card here just to remind us that the last day of December, if we were to stick with the downsloping trend line that has held 2022 as its resistance tool, then 40-20 is the highest we could go by the end of December, okay? That's interesting. 40-20, that's interesting. And on the SPY, that's right around 400 to 402, okay? And 400 has been pretty sticky for the SPY. Okay. I'm sorry. I should have, my apologies. I should have put this up on the screen. I don't know why I forgot, but I guess I was jumping right into answering the question. Let's see here. Yep, skip those comments. They're no good. How's it going? How are you? Questions. You think it will be a 75 tomorrow? No, I don't. I think it'll be 50 tomorrow. And if we look at the CME Fed Watch tool, there's an 83% probability of a 50 basis point rate hike, okay? 50 basis point, that's what the market is expecting, and I do believe that's what we're going to get. Now, if we go to February the 1st, which is the first, January the 31st through February the 1st, that is the first FOMC meeting of 2023, and you see here, we're looking at a 54% probability of a 25 basis point rate hike, a 39% for a 50, and a 6.4% probability of a 75. So everyone's looking at a 50 tomorrow, and then a 25 on February the 1st, and then potentially we hold from there. That's as high as we go. That would take us up to 475. But I do think there is a pretty big possibility the Fed goes to 5%, which would mean the March 22nd meeting, maybe there's another 25 basis point rate hike. Now, if we look at that specific date, there's a 48% probability of a 25 basis point rate hike. Okay, so that is interesting that it's lining up that way, just to put it out there. I hope Jerome shocks us with a 75. Yeah, that would be a shock, and that would let us way down. The black line that is down here, that's coming up like this. This is the anchored VWAP for the low of the year, which happened on October the 13th. So we are really just coming into being right in between the two anchored VWAPs there for the highest price of 2022 and the lowest price point of 2022. They're like, we're trapped in between those two price points. And as time goes by, if we just continue to move sideways, they're just going to slowly, I got to move my hand. They're just going to slowly start coming together. Be interesting at what happens when they do, if we continue to move sideways. And remember, at the beginning of December, I said, what could December end up being? A sideways month, right? It could completely defy everything, right? All the seasonality charts for December could completely be defied. If we look here all the way to the right of the chart, all of the lines, black, blue, purple, green, red, everything goes in an upwards fashion in the month of December. But what if we shock this pattern and we just move sideways? We just move sideways. I mean, the red line down here at the bottom, that is the closest representation of a seasonality pattern for the year that we are in. We start and we end lower. And this is called all the major bottoms. They may have been off just a little bit, a week or two, but they have called all the major bottoms in the correct months, which was very interesting all year long as we've been following along with this seasonality chart here. Okay, let's keep rolling on. Let's see here. If there are new triggers for inflation, it could be a whole new calculus, and the Fed needs to hike and hike again. Right. Okay. Okay. Yes. If there were new, all right. Let's use an example. Let's go with this hypothetical. Okay. Just pulling numbers just out of thin air. Let's say, for example, the Fed gets to their terminal rate, they stop and they hold. Okay. They stop and they hold. Inflation goes down because as the Fed aggressively hiked rates, inflation is now coming down due to those rate hikes. But then when they stop and hold, let's say inflation comes down to like 3.5%, 4%, and it gets stuck. All right. A couple months go by, maybe 3 months go by, inflation is stuck at like 3.5%, 4%. It's not going lower. Unemployment is rising and ticking up. So the Fed's got to take some action here and do something. And that could be raising rates again. Okay. Now, I want to make something perfectly clear for everyone about rate hikes and market expectations. As the Fed hikes rates, okay, that doesn't necessarily correlate to a market going lower, okay? A Fed pivot does and can correlate directly to a market going down. Why? Why would a Fed pivot? You hear everyone talk about a Fed pivot and how bullish that would be for the market. I'm telling you, that's wrong. If you look back in history, 2008 is not a great example. You have to look at the points in history when inflation was high and unemployment was low. When you look at those specific points in history, rate hikes actually led to the market going higher. Slightly, but it did go higher. A Fed pivot is when the market crashed. That's where the real crash happened. You think this year was bad? No. A Fed pivot is when the market crashes in those periods back in history, because the Fed is pivoting because unemployment is going up, because the economy is going into the gutter, and we're going into a deep recession. Bad economic data showing major growth, major decline. That is what sends the market down, crashing further. And that is the reason the Fed pivots. Now, I know this time is different. Every point in history does not rhyme. Okay? Or no, I said that wrong. History does not repeat, but history does rhyme. So, although we're not exactly the same, there are similarities. Now, going into the future, if unemployment stays relatively flat, doesn't really move. If inflation comes all the way down to the 2%, then the Fed will pivot and start lowering rates. That's a soft landing. Now, if we're moving along, okay, and the economy is getting bad, unemployment is coming up slightly, but inflation is coming down significantly, the Fed could pivot. And when the Fed pivots due to that circumstance, the market can come down further, harder, and faster than it did this year. So there are still some dangers to pay attention to in 2023. But that's the whole reason why we track the markets and we pay attention to what's happening. So we're prepared and we know what to do. So preserve your capital. Use good risk management. Use stop losses. They're there to help you. All right. Let's see here. But that's for the future. Yeah, absolutely. Tomorrow we have 25. That would be amazing. Well, that it could be. It could be very well. When we get to the top, right? When we get to the terminal rate where the Fed is done hiking and they pause, not pivot, when they pause, when they stop raising rates, markets can float up at that point. because it just means that inflation is still high. It's not at the target rate. Unemployment's okay, and the economy is quote unquote okay. I think that's coming really soon. We'll know tomorrow. But I don't think we'll get a 25 basis point rate hike tomorrow, because Jerome Powell has said in the past, we're going to stick with this until the job is done. We're still at 7.1% for inflation. 7.1% is a long ways away to the 2% target. 7.1% is closer to peak inflation than it is to the 2% target. So think about that for just a moment. Perspective is everything. The perspective is 7.1% inflation is closer to the peak 9.1% inflation than the target 2% inflation. So we still have a long ways to go and a lot of work to do to get there. Not a lot of market participants understand that. So that's why I'm not very optimistic about how high we can go, and I'm more realistic about how sideways we could go. All right, let's make sure I'm getting everything here. Did you see MLGO today ran from $4.50 to $71.50, back down to a low of $3? No, I did not see that crazy move today. I did not. I was just focused on the S&P 500. Although yesterday I did catch a play. GM. I'm sorry, not GM. It is GA. The ticker is GAME. GAME. M-E. Good Lord. GAME. GAME. I did catch this one yesterday and made a beautiful return on this one. It was just incredible. So yesterday, this was up 99.1%. Okay. Today, it got as low as what, 85 cents, but it closed at $1. And that was down 5.6%. But this was crazy. I got in at 14 cents and I ran this thing all the way up to $1.05 when I got out of it. Just one of those that you just happen to catch. It's a crazy run and you just roll with it. I don't get many, but this one just kind of fell into my lap yesterday. $4.10 by end of week. Happened in 2 days. Well, if you want to say yes, we tapped a high of 410. We did do that today. We did tap the high on the SPY was 410.49. So you were absolutely correct on that one. But I like to play the weekly game. Where are things going to be actually by end of week on close of business on Friday? We're real close to that 410. So I'd be curious to see, can we get back up to it by truly end of week? That's the games I like to play. We start on Monday and then we pick our numbers. Where are we going to be by close of business on Friday? So you did a great job. You did a great job. We did tag 410 today beautifully. I do find it so interesting how we are so close, or we came so close today to that break even, which on the SPY is about 411, just about $1 off, or maybe even just 50 cents off from the high of the year. Okay. With the anchored VWAP. Just so interesting to me. With you, I was so convinced that I sat on my hands. Yeah. Yeah. That's awesome. That's awesome. Okay. Yeah. I will pull that one up. Let me just swap this out so we all know where we're going. Okay. Now, Moderna, I think, was up over 20% earlier today. I believe it was due to, was it a cancer drug? I think there was some sort of clinical data. Let's see here. Where could it be? Yeah, right here. Cancer vaccines could be in greater focus after Moderna Merck candidate shines. So that's the whole reason why Moderna shot up today, 20%. I think this morning when I looked at it, it was like 22, 21. I guess they were up 24% in afternoon trading. Where's the meat of this? Yeah, it rose to fame with its mRNA COVID-19 vaccine. Let's see, mRNA technology. Personalized cancer vaccine mRNA 4157 / V940 from Moderna and Merck, in combination with the latter's blockbuster Keytruda, can cut the risk of recurrence of or death by 44% versus Keytruda alone in the phase 2B study called Keynote 942. Okay, well that's great, all good, but this is the reason for their rise today. Looking at the chart though, a big move like this, a 20% move in a day, can quickly go away. Okay, look at 2 earnings ago, just to give you an example. 2 earnings ago, which will put us back here, right here. And the earnings were actually on this green candle right here, huge green candle, up 15, let's call it 16%. The next day, it was up another 4%. But then look what happened after it peaked. Quickly sold off. So when you have big moves in the market, okay, it can be countered with another big move. So, I mean, just look at yesterday for Moderna here. Big red candle, down 7%, and then up 20% today. I'm sure tomorrow it'll probably fall back down, maybe to the 190 level, because someone's going to want to take their profit. And I know it ran way up here. It broke above 200 today. It got to 208 and then closed at 197. So there was some profit taking, but I think there could be some more tomorrow, especially if the Fed does something silly. Now, there was a bit of change of character here. If we look at the high that was made back here 2 earnings ago, what would that be? August, well, it'd be the day after, August the 4th, when it actually hit that high. That's right where we closed at today. So a high of 197, we closed at 197. That is interesting. That high did not hold, and we have the Fed tomorrow. So I think it might be interesting on how low this could go. It looks like we would have some support at that 190 level. And if we look here, we got to 189 on earnings day. So that 190 level could come in and act as support if there's some more profit taking, or if the Fed does some kind of foolery with the with their economic projections, summary of the economic projections. But you can see where Moderna's come from. Bumpy ride, big moves with COVID, big moves in 21. But it looks like it's got a nice base of support. Let me open this up just a little bit and pull it up some. And I should put volume and the moving averages back on the screen. It's above its 200 moving average. That's good. It's 2 earnings ago. Did it reach it? It looks like its 200-day moving average got broke for about a day or two. That's interesting. But yeah, look at this good base of support here. I mean, wow. Even with volume on here, look at the base of support. This is incredible. Absolutely incredible. Boom, right there. That's about 115 right there. Double bottom, ran up beautifully. It's about 115 is the bottom there. And then look at that, 115. Wow, that's such a nice and strong support there. Okay. All right. So all I can say here is that things that go up quickly, you got to watch out for the profit takers, right? And you got to look for other areas of support. I wouldn't be betting after being up 20% that it holds there or even accelerates from there, okay? So I would be a little bit cautious here. If we go from using a Fibonacci, right? And let me get the highlighter. We go from this high here and we go down to this bottom here, right? Right now, price is at the very top. So it's retraced 100%. It's probably going to go lower after doing so. And that's why I'd be looking, really, 190 is the first area, but real support, it looks like, is right around 175. So if it does pull back because the Fed, maybe it does something the market doesn't like, or it just ran up really fast, so watch for profit being taken. Those are just some mechanics that I'm thinking about looking at the chart. Now, the news is wonderful, but a headline will only hold a stock up for so long, right? They're going to need something else to come out to back that up. Maybe it's earnings, but that's not till next year, not until March of next year or the end of February of next year. So that's what I think about Moderna here. Great news for cancer. Let's see here. What's next up here on the chart? Let's see. I want to, anything else about Moderna? Okay. Looks like Tesla is up next. So let me clear out some of these marks here. I don't like to leave a messy chart. Oh, but looks like I'm just leaving a messy chart. Okay. All right. Let's go to Tesla. TSLA. Can you believe Tesla is down? Yesterday when I looked, it was like 58% from its high this year, just this year. That was a big drop for Tesla. And I think Tesla can come down more. I do. I don't think Tesla is at its bottom yet. And the reason I say that is because there have been news report. None of them covering Tesla files, but covering Elon Musk, saying that Elon Musk is being run too thin, right? Elon Musk is juggling too many things. Elon Musk has tarnished his reputation because of buying Twitter. Blah, 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 blah. FUD. Fear, uncertainty, and doubt. Now, I do believe that a CEO can only do so much. There's only 24 hours in a day, and you got to sleep a few of those hours. So I am inclined, because I've been there before, it's tough to even just run one business, let alone multiples, that he could actually be running a little thin. But that's where good people, surrounding yourself with good people is always best, right? You don't want to be the smartest person in the room. So the people that he puts around him, the people that he leaves in charge of Tesla, SpaceX, Boring Company, all of his endeavors are just as important as he is. All right, so let's see here. Wondering if Tesla going to have a similar move tomorrow or Thursday. Everyone's piled in short. Stock is broken. Yes, it is. Quad witching is coming up. Is to screw both sides. Yeah, the quad witching day. I haven't even mentioned that yet. And a lot of the quad witching days or double witching days, typically they don't really produce a lot. They're there to scare investors for the most part. However, sometimes that's not the case. Because I do believe the last witching day, which was a double one, did cause a bit of harm to the market. Okay, wow, this thing is just insanely moves incredibly. All right, let me do this right quick. Do I have it pulled up here? No. So let me do this. I don't have my lines on here. I want to put them here because it's going to help me evaluate where Tesla is going to be. So let's do this right here. Give me a quick moment. I just want to pull up my weekly expected move chart because I've got Tesla is one that I do. And those weekly expected moves come out every Sunday evening. Okay. Tesla, we're looking at a 13 plus or minus $13.83 move. So that's 190. Just do this. Okay, come on. I'm sitting here hitting buttons and it's I'm not paying attention. It's happening on the other screen. I have to get my cursor back on TradingView. All right, there we go. No, that's not right. Yeah, it is. Horizontal line. Let's open it up. So the top end for Tesla is 192.88. And let's make that solid. And on the lower end, what do we have here? On the lower end, it would be 165. 0.22. Okay, so right here, this is the weekly expected move. It's an equation. If you're unfamiliar, it's an equation that the option market predicts, okay? And it says where price should be by the close of business on Friday, okay? And it's right 68% of the time, okay? So it uses a whole equation going off the closing price on Friday, and then using implied volatility and volume and so forth. An equation spits out a number, two numbers, a top and bottom, upper end and lower end, on where the market, the options market, believes price will be the following Friday. So 1 week away. And you can see here, it closed down 4% today. The markets took off, but Tesla was down 4% to 160. The lower end of the weekly expected move is 165. And typically, when price action moves outside of the weekly expected move like this, right? Typically, it will bounce and come back to being within the line, okay? Now, it's not a support or resistance line. It is just a price point. It's to help you manage your risk, because 68% of the time, price is going to fall between these 2 points. It's a 1 sigma move. Now, Tesla, it's a big boy, okay? Sometimes we can have a 2 sigma move, which would be like this, okay? A 2 sigma move captures price action 95 to 98% of the time. That's as close to 100 as you can get, even though there's no guarantees in the market. So that 1 sigma move, the weekly expected move price, which 165 is the lower end, 192 is the upper end, that's where price action should be between by close of business on Friday. So yes. And Tesla got down to look at this move today. A high of 175, a low of 156. A $20 move. Just today. A $20 move. That's incredible. And it ends up closing with a almost $7 move. Wow. So I think here, going with your question, wondering if Tesla going to have a similar move tomorrow or Thursday. Everyone's piled in short. Stock is broken, quad witching. It's screwing both sides. There's two. Yes. I do think Tesla could move down further. Look at today's volume, right? It's way up here. I don't know where did my sugar? Did I accidentally do something? There it is. Okay. I was missing my average here. The blue line that's running across the volume right here. So you can see average volume and then where volume was today. That was a lot of pressure today when you see big volume spikes like that. I don't know if we can see a 4% move to the downside today. I mean, tomorrow. That's going to take a lot of volume, a lot of momentum to do that. And typically when you see those spikes, they don't continue day after day after day. especially with a big dog like Tesla. I mean, just look back in history here. When you have a big spike, I mean, this one is but it's not in the realm of today, of what today's volume was. I mean, look at these spikes. They don't typically happen back to back. But again, these aren't nearly as high as what today was. And that's even dropping down lower. So I think you get my point there. I don't think the move, if it is down, will be as severe as today. All right, let's just clean that up a little bit. Okay, one other thing to look at here, technical wise, for Tesla, is this volume shelf profile. And where's price at? So we already have a couple of points for price action. I'm trying to get all of 2022 on the chart, and there we go. So for the whole of 2022, obviously we've got a big section right here where, you know, price moves sideways. August through September. Yeah, I mean, that's like the worst time of the year. It's always a rough time of the year for trading. Or it moves sideways. And if we're looking, that price point right in between that moves sideways, like 295, that price has got the most volume. But as we come down, we're starting to get out of the realm of the volume shelf profile. I mean, look at this. When we get down here to today's price, 160, right? What do we see here at 160? It looks like it's all selling. Yeah, 250,000 bids versus 2.9 million sell orders at $160 a share. That works out to being about 3.2 million total. And if we look at today, where I can't quite see it. What is it? 175 million trades. It's right in numbers. Yeah, 175 million trades today total for all price points. And the average is only 91 million. So nearly 100 million trades above average. Not quite, but almost. If we round our numbers just a little bit. I mean, that's just a big move of a day. And I know Tesla can do it. But this to me is just shaping up like it is getting crushed. Now, on the RSI, we're at a 34. And remember, 30 and below is technically oversold. So we're not quite there. MACD is starting to cross over, which would man, it's kind of tough to see. They're like right there intertwined right now. Okay. You know, I would say today was kind of a one-off with it falling like it did today. And if it did fall tomorrow, I don't think it would be as 4% move like today. I mean, let me go back in time a little bit further. Yeah, see, okay. Here's a good example right here. So when Tesla, obviously everything is stock split adjusted, right? When Tesla went up through $160 a share, it went like this. It went straight up past it, okay? Straight up past it. That means if you're coming back down, technically on the chart, there is no support or resistance in those sections where price moves like almost straight up, or in the opposite direction, moves straight down, okay? You've got no reference points for support or resistance. So you can use your weekly expected move, you can use your volume shelf profile, but typically when price is moving so fast, it's just skipping price points. So even on the volume shelf profile, I mean, look at how it goes in like this and then back out while Tesla is, going straight up. So if we're looking for past support, we do have it right there. And what is that? That closed at 158, so not too off from that 160, okay, where we are right now. And then if we really want to get the maximum support, we got to come all the way down to 150 right here, okay? So maybe Tesla's got another $10 worth of downside to it before it can find any, real support. Just giving out a price point here. Because there was sideways movement right here, and that's between 130 and 150 a share is where that sideways movement was back there. I mean, that's the only reference point that we have here, because Tesla just, shot up right above this 160 level. So I hope that helps, and kind of technically judging. And Tesla is a tough one to do because it can move so rapidly. Let's see, what else do we have here about Tesla? Yeah, I wanted to short Tesla today, but it's scary. Tesla can be. I mean, it can just move real quick, but it's also extremely weak. It is, and that's why I'm looking. Since that 160, it doesn't have anything to base itself off of. I mean, we got 165 as the lower end of the weekly expected move, but we know a 2 sigma move can happen. I mean, we saw a 2 sigma move, was it last week with the S&P 500? So getting down here to 150 to find support, I mean, it's a $10 move, right? And if we close that, 160 and we go to, 150, almost on it right there, it's a 6.3% move, 6.4% move. That's $10.25 move. And that would put us down to that old support level, or old resistance, excuse me, around that 150. So that could be a possibility, okay? And looking at today, it got down to 156 as a low. So 150 is not that far off. Not that far off. All right, let's see here. Yeah, I'll probably play calls tomorrow. Already a 10% decline this week in a market that ripped twice. Seems too easy, doesn't it? It does, doesn't it? but it's not quite overextended yet. And you know, with the Twitter files, there's going to be a what would I say here? Some sort of counteraction to it that could potentially hurt Elon Musk personally, which, you know, then may, who knows what that's going to do. But again, surrounding yourself with good people is one thing good that he does. Stock is effed in the coming months. See you below 100. It's always possible, right? Like I said about Moderna, things that go up rapidly tend to come down rapidly too. And Tesla is definitely one that went up rapidly. All right. Wow. Thank you guys so much for all of the great questions today. I love digging into it with you guys. If you guys have any questions, plug them in now, or any additional questions, I should say. Plug them in now. We'll go through them. Otherwise, we'll wrap this up. I'll give you a moment. You're absolutely welcome. I'll give you a moment if you want to have any last-minute questions you want to ask or anything that we can go through. I think I pretty much wrapped up everything that I wanted to say about tomorrow. Just be careful, you know, risk management, small position sizes, let the market digest the information first, and then wait for the setup, the breakout. You know what to do. Okay. All right. Well, it seems like that's it. I'll be back tomorrow after the market is closed to talk about what happened, why it happened, and what to expect going forward. And of course, to answer your questions, because that's what I'm here for. And they never guided down. Tesla, I'm guessing that is. Yeah. You are absolutely welcome. Love seeing you here every day. I do. I absolutely appreciate it. Thank you so very much. Thank each and every one of you for joining me today and joining me each and every day. I greatly appreciate your company, your time, your effort. It is amazing. Absolutely amazing. So I'll see you guys tomorrow and gals after the market has closed to talk it all over again. So have a wonderful evening. Have a good and profitable day tomorrow. And I'll see you back here after the market is closed. Have a wonderful night. Take care.